Have you ever thought about losing money because you fell into common traps when investing in cheap rental properties? Have you ever had headaches dealing with a delinquent tenant, a vacant property sitting for months, or gotten tangled up in endless bureaucracy? If you're tired of watching small savings turn into big losses, this video is for you. I'm going to show you, with no fluff, the main mistakes that make so many people waste time and money in this market, and most importantly, how you can avoid them with simple, practical decisions. Stick around until the end to learn the strategies that really maximize your profit and make your rental business much safer. Take a moment. Have you ever looked back at your past investments and noticed a pattern of impulsive decisions? When a deal seemed too good to be true, did you ever stop and ask, why is it so cheap? Or did you just follow the crowd, believing that cheap property always means guaranteed returns? Now, reflect. How many times could you have avoided a headache if you just sought out more information? Let's break down the most costly mistakes together, and if by the end of this video you recognize at least one mistake you've made or nearly made, drop a comment below. Sharing experiences is one of the best ways to keep other beginners from falling into the same traps. Have you ever been seduced by a low property price, ignoring everything else around it? Be honest. When's the last time you checked out the neighborhood at busy hours, talked to residents, or made sure there's real rental demand in that area? Many get excited about finding a bargain, but by overlooking infrastructure, proximity to schools and shops, end up stuck with a hard-to-rent asset. Saving on the purchase may actually mean you won't be able to rent it out or will only attract high-risk tenants. Now, think again. Have you ever been so eager to close a deal that you miss subtle details, like the need for minor repairs? Maybe you told yourself, it's just a little paint, but later discovered leaks, loose floor tiles, or electrical problems. Remember, every little unplanned repair eats into or wipes out your profits. Before you sign any deal, make a habit of visiting the place calmly, turning on faucets, switching on lights, inspecting ceilings, and asking other residents about any history of structural issues. Have you considered the financial impact of poorly done maintenance or renovation that just drags on? I know people whose cash flow was crippled for over a year simply for ignoring this. Do the math. If each unexpected leak costs $200 and it happens twice a year, profit becomes loss fast. Do you usually analyze the tenant's profile or just accept the first person who appears because you're in a hurry to start collecting rent? Some landlords neglect any criteria only to realize the mistake after the first missed payment. Have you ever thought about the real cost of a default? Besides money not coming in, there are collection costs, emotional stress, and the risk of property damage. That's why you should always require proof of income, references from previous rentals, and background checks with credit protection agencies. Don't be afraid to say no. What hurts today might just save your pocket tomorrow. Speaking of contracts, have you ever read any articles on real estate law before searching for a contract template? Many people rent out with weak contracts. Imagine the impact in court if there's a dispute. It's worth talking to a lawyer to adapt the contract to your situation, set clear guarantees, adjustment clauses, and termination rules. Ask yourself, if you had to go to court as the property owner, would you have solid protection? If not, it's time to rethink your next moves. And what about advertising? Imagine investing thousands, but only telling friends about the property or listing it on a single website. That severely limits your chances of finding a good tenant. Have you tried using professional photos, highlighting your property's unique features, and testing different listing platforms? Try this. List the same property on 3 different sites and compare the response. Often, a tweaked description and better photos can triple your weekly contacts. Now, for some re-engagement, had you started picturing yourself prepping your next investment? Did you jot down any of these mistakes you never want to repeat? Tell us in the comments which one caught you off guard before or worries you now. Jump in and interact, because sharing is a big step towards solidifying what you learn and building a support network with other investors. Let's dig into more real-life examples, because it's those everyday details that separate success from disaster. An investor, trying to save time during screening, accepted a tenant without a credit history. They seemed harmless, but it turned into 8 months of missed rent and property damage requiring urgent repair. The lesson: 10 minutes checking would avoid a $1,500 setback. A property in a distant suburb, though cheap, sat empty for 14 months because it was far from transit and shops. In the end, the owner sold it for less than they paid, just to unload the headache. Their takeaway: never invest without assessing transit and real rental demand again. It's common. Landlords who don't set aside a reserve fund for repairs panic over the first leak or equipment replacement. Quick question: have you ever calculated what percentage of your rent you save monthly for maintenance? The ideal is at least 10%. This keeps you ready and steers you clear of nasty surprises. And another point: how many of you have avoided adjusting the rent annually out of fear of losing your tenant? Did you know that if you never adjust for 5 years, you could end up getting 30% less just due to accumulated inflation? The fear of raising prices when not handled smartly eats up your long-term income. Here's another powerful reflection: has a friend or acquaintance ever tried renting with just a handshake, skipping the written contract by relying on good sense? Ask yourself, would you trust your assets to someone with zero formal guarantees? Experience shows that what starts friendly often ends in trouble. Take some time to look at facts and numbers. According to Seco VSP, property listings with professional photos get up to 40% more responses than standard ones, and those close to metro stations rotate tenants 60% faster. Use these numbers in your screening and bet on solid information. It's your best ally. Let's repeat together the mantra of every investor who wants to avoid losses: analyze, question, plan, execute. Always calmly, without rushing, and paying attention to every step. From your first walkthrough, thorough tenant screening, solid contracts, high-quality advertising, to carefully planning for extra costs. Don't underestimate any part of the process. Let's get back to basics. Why do you want to invest in real estate? What scares you most about the process? Share your motivation here. Your answer might help you prioritize future choices and notice details you were missing. Before wrapping up, make a commitment. For your next property, will you visit the neighborhood at different times, talk to neighbors about the area, add up all the costs, consult a lawyer, set up a reserve fund, and use professional photos in your ads? If you already do any of these, share your story. If not, what will you change? Can you picture your life a year from now applying all these tips? Less stress, fewer defaults, constant occupancy, growing rental income, and calm decision-making. Investing can and should be enjoyable when you have control over the process. One last tip: right now, jot down your own investment screening routine and compare it with what we've covered here. Where are your weak spots? What could you improve? Each small tweak is a giant leap toward your next level of success. If you've made it this far, you know your chance to transform your real estate investment journey is in your hands. Share in the comments, what was your biggest win or mistake? What tip would you give other beginners? Get involved, swap ideas. Let's build a community of prepare, fearless, and informed investors together. Don't forget, like the video, subscribe, share with a friend who's considering real estate, and download the exclusive bonus, the full analysis spreadsheet and checklists in the description. That's worth its weight in gold for anyone who wants to avoid common mistakes. Remember, investing isn't luck, it's method plus action. And you, from today on, are much closer to reaping the rewards of your choices.